Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. And the question becomes, what is my ability? And that's when the fun and games begin, if we want to go down that road, but we're not going to. I do have quite a few questions and replies and comments to get through in today's video. And I won't say anything about what happened on Wall Street overnight. It was another horrible trading session. In fact, probably even worse than Thursday's session. I'll discuss all this in tomorrow's or Sunday's 6th of April's technical update video. And I do have quite a few questions about my plans moving forward. And we'll talk about those plans during this video. So won't be talking about this chart. And yeah, I'm not going to say anything more. I was going to say, I think NASDAQ is now in a bear market, down more than 20%. Okay, so let's have a look at the first question I am going to discuss. And this is back a few days ago from P. Vassie. When I say a few days ago, I mean 6 days ago. And this is a very simple question to answer. Hi, Kneppy. I've been following you for a while. Noticed you use CommSec, and so do I, but don't you find them expensive for brokerage? And there was actually a reply from Rick Thelian who said, cheaper than they once were. I guess you can shop around at other brokers. Okay, so I do have a bit of history with CommSec and the CBA. I used to have a CBA account when I was younger. In fact, my first real job was with the Commonwealth Bank after university. And funny enough, because I worked with Commonwealth Bank, this was back in 1997-98, and one of the perks about working at the Commonwealth Bank is you don't have to pay any fees on your accounts. And then I left the CBA in 98, went traveling the world, lived overseas for 8 or 9 years, and then I came back and opened up a new CBA account. And I said, I don't work with you anymore. And the person who opened up my account said, who cares? And I still don't pay fees. I've told CBA people, I don't work with you anymore. And it doesn't seem to matter to them. So at this point in time, I don't pay any CBA fees on my account. So I do all my banking through CBA because of that. And when I first started investing, it was through CommSec. And that was a fairly obvious transition. But one of the things I didn't like about CommSec is their fees. It used to be broad $20 every transaction. I hated that. That was, if you're trading a fair bit, even investing a fair bit, that was a fairly big cost. But I do like their platform. So eventually, and one of the reasons why they were able to maintain $20 is because really no competition or very little competition. But then the competition came maybe 6-7 years ago. Self-Wealth was one of the first one, a few others in there as well. And Self-Wealth had $9.99 fees. And then Superhero came in. They have $2 fees. So what I've done is I've transitioned to Self-Wealth and Superhero. I trade through Superhero because I do a lot more trading. So I want lower fees. Whenever I want to buy a company for the long term, I just use my Super because that is through Net Wealth, and they have $18 fees. So I want to do much less trading when there is high fees. So no trading at all through CommSec, but that can change because I do have a margin loan with that. In fact, if you have a look at my portfolio, people have told me, we can see your account numbers, that sort of thing. It doesn't matter. It doesn't matter because there's nothing in there. But I do have a margin loan. In fact, I'll talk about the margin loan later in the video because someone did ask a question about that. Anyway, so I do have a margin loan and I might trade through that. So the reason I still use CommSec a lot is I really like their platform. I got used to it. I like their platform and that's it. I don't trade through CommSec. I trade through Superhero mostly, also a little bit of Self-Wealth, not as much. And when I do want to own a company for the long term, superannuation is the way to go for me. So that is my answer. And by the way, if I can find it here, Rick Thelian is absolutely right. CommSec is decreasing their fees. And I think they'll have to keep on decreasing the fees as competition increases. Eventually, we'll have a broker who charges zero. Who knows when that's going to happen? I think maybe even now there is a possibility some brokers might be offering that, but it will eventually happen. And Commsec to compete will have to continue lowering their fees. That's competition. That's the benefits of competition for the consumer. Okay, so thank you for that, P. Varsi. Now on to Scott. In fact, Scott II or 119RB has two questions I'll be replying or answering. And the first one is in regards to IPH. Did IPH take on debt to pay dividends? There's certainly be issuing shares, handover fees for acquisitions. Risk is low, but uncertainty high in that future earnings are uncertain, but downside price risk is low. Time horizon is the question. So let's have a look at IPH. And this is something I found with Telstra not that long ago. They were actually increasing the debt to pay dividends. I don't like that at all. Now, I've been looking at IPH because the share price has been dropping, and I'm seeing the possibility of value. I'd be much more interested if their earnings per share were increasing, but they're not. Revenue, nice increase, but earnings per share are not increasing. So either margins are decreasing or the company hasn't been making a lot of acquisitions and they've just been issuing shares to buy those acquisitions. So this is a chart for IPH. It's getting interesting. Share price might fall a little bit further before I become really interested. I'd become really interested if the share price falls to about $3.50, which is the lows or near the lows we saw back in 2018. But the share price has fallen a fair bit. Now, I did a little bit of research on this company back a few years ago when the share price was quite high, and I found no reason to buy shares. I thought this company was overvalued, but currently the P ratio of IPH, I would say is 14. Let's have a look. 14.92 with a dividend yield of 8.91%. So obviously the market is thinking not much growth for this company moving forward. And if the company can prove the market wrong, there's really good value here. Now, when it comes to, is the company increasing the debt to pay dividends? I'm going to show you what I'll do to answer this. So what I'm going to do is go to FinChat and I'll have a look at their financials. And I'm going to go to the cash flow statement. Yeah, I'll go to the cash flow statement. And what I'm going to do is have a look at cash flow from operations. Actually, no, what I'll do is have a look at free cash flow. I'm assuming their calculation of free cash flow is right, which is operating cash flow minus capital expenditure. I'm assuming that that would be near enough for the purposes of this video. And then I'm also going to include common dividends paid. Now, what we don't want to see here is common dividends paid being greater than free cash flow. That would be a really bad sign, really negative sign. So let's have a look for IPH. So on the top is free cash flow, on the bottom is dividends. And I would love it if that was sort of positive, but dividends is negative. Anyway, so what we don't want to see is that dividend number being greater in absolute terms than the top number. And looks like we don't see it. Looks like the dividend payout is less or below their free cash flow. So there's no reason why the company does have to pay back or does have to increase their debt to pay a dividend. Now, the other thing you could look at is the change in debt. And you could look at the last half year accounts, financial statements, and just see if the debt did increase. But if the debt did increase, there's a chance that it increased because of acquisitions. But this is what I'd look at to answer this question, even though I'm not even looking at debt. But this is, I think, a pretty good sort of proxy whether this company is doing the right thing. And I'll say yes at this point in time. And that's probably my answer. No, Scott. Okay, on to Fishball 1634. There was a couple of fishbowl questions I was going to answer in a row. The first one was in regards to, was it ERM or EMR? I get these two companies confused. One is Emerson and the other one is Emerald Resources. Yeah, EMR is Emerald Resources and ERM is Emerson. I can't remember what the question was about, but I decided to pivot to this particular question from Fishball. I would never lose sleep for buying a stock, but definitely would when it comes to selling. How about you? Okay. No. I never lose sleep buying a stock. I never lose sleep selling a stock. And the main reason I think behind that is because I have a plan and I stick to my plan. And the only way I might lose sleep when selling is when I don't follow my plan, when I go against my plan. So I have no trouble sleeping, no stress, no trouble sleeping. I'm not worried. And I think the main reason behind that is I have a plan for everything I'm doing. So yeah, don't lose sleep when I am selling or have sold a position. Okay, he continues. 2025 is a value play for me. Growth stocks had its run. Time to revert back to underpriced value stocks. This has been a theme over the past 15 years, that eventually value stocks will have a run, and they haven't had a run in 15 years. Stocks, well, that's probably not absolutely true. Stocks with around 50% upside, in my opinion, are, he's got like 5 companies here. Okay, so interesting. The first one is Nufarm, and I've taken trading position in Nufarm. And one of the main reasons behind that isn't necessarily because I think it's really good value. It's because of the chart. The chart turned positive. Although the share price did decrease on Friday and probably will decrease on Monday, so I might be selling this position. Who knows? By the way, my other position, APA Group, went up. So this is really defensive, infrastructure play, way more defensive. So nice, actually went up 1.77%. So that was a good trade for me. So Nufarm chart looked pretty good. That's why I took a trading position in Nufarm. Air New Zealand. I've been looking at this one for a while as well. Chart has turned positive. And also I think there's a better chance that this one could be undervalued compared to Nufarm. Although to be honest, I really haven't had a look at Nufarm all too closely when it comes to valuation. But definitely Air New Zealand is there. Or should be there when you're talking possible value. Fletcher Buildings, I'm not the biggest fan of these type of companies. New Zealand-based chart, chart doesn't look half bad. It looks like it is trying to go sideways, consolidate. Share price has dropped a fair bit over the last, say, 5 years. Well, 3, Well, for a lot. Well, in fact, the long-term chart looks awful. Share price reached a high in 2016 at 950. It's now 291. Possible lows near, or it is possible near the lows. Yeah, I'm not the biggest fan of Fletcher Building, however. What else do we have here? Oh, Kellian. I'll talk about KLS, Kellian, in tomorrow's technical update video because I was looking at this last night and it really intrigued me. So we'll talk about that tomorrow. And Helios. Helios is interesting. Another company whose share price has dropped a lot. Come on, Helios. And these companies, 3 companies in the same sort of space, Helios, Sonic Healthcare, Australian Clinical Labs, whose share price have dropped a fair bit. They were beneficiaries of COVID-19. You can see that, well, that's the weekly chart. If you can see it back in 2021 or 2020, 2021, share price of this company went, it wouldn't say insanely up, but it did go through a nice uptrend there, reached a high of $5, and now it's pulled all the way back to $1.38 and $1.38. If you have a look at the daily chart, I'm not there yet with Helios. Share price again just going sideways. No real trigger for me to buy, and I'm not even sure about value when it comes to this company. So I'm not on the train when it comes to Helios. Definitely, Nufarm chart looks interesting. Air New Zealand, definitely see some value there. Fletcher Buildings, I'm not sure. Kelsian looks really, is it Kelsian? Yeah. Kelsian looks really good chart-wise. Well, not good. In fact, it looks ugly, but it looks interesting just based on, well, I suppose, long-term support levels. And Helios, when New Zealand comes out of recession, I do expect some of the stocks to make a comeback. Interesting. Maybe when New Zealand comes out of recession, every other country goes in recession, or maybe New Zealand just stays in recession for a few years. Maybe. Okay. So thank you for that, Fishbore. Now on to PTB Fund, if I can find my mouse. There it is. PTB Fund, who's talking about Opthea. This is really interesting. This is a really good comment from PTB Fund. I went and read that Fraser's email after Opthea had their massive phase 3 fail. And the way they explain the weakness in Opthea phase 2 results makes simple sense. But I never would have picked up that by myself. a cautionary tale about not just story stocks, but actually reading between the lines to see how undeserving of hype the story is. So this was a really good read a week ago or so, where Frasers, the people at Frasers, looked at the results, phase 2 results, talked to management, and they didn't like what they saw. And because they didn't like what they saw, they went counter to the market. They went contrarian to the market, and they had no thoughts of even buying Opthea shares. So they definitely dug a little bit deeper than most people would have. And that can be very beneficial, really beneficial if you dig a little bit deeper. And a classic case of this was Eric Townsend of Macro Voices, I think, went on, what's it called? What's it, the podcast called? We Talk to Billionaires. Eric Townsend, We Talk to Billionaires, COVID, February 2020. Yeah, this is it. Yes, this is it. They also have a YouTube. Yeah, this is it. I'll stop it here. So I'm a subscriber to this particular podcast. So in February of 2020, We Study Billionaires released this particular podcast called Wuhan Novel Coronavirus COVID-19 Economic Impact with Eric Townsend. And this was absolutely fascinating podcast. So this was in February 2022 or 2020 when the Nasdaq was at a record high, and there was this strange disease in China. They were locking down in China, building new hospitals at a rapid rate. And if you dug a little bit deeper, you would have found a really intriguing story. And that is what Eric Townsend did. That's his job, dig a little bit deeper. So he started talking to experts, that sort of thing. And he found what was happening in China was really scary and could happen to the rest of the world. And that's exactly how it played out. In fact, what he thought might play out, it exactly happened. And at that point in time, the market was at a record high. And I still remember reading or listening to this particular podcast because I was going to cash before this. I thought the market was looking a little bit toppish, and I wanted to repay my mortgage completely. And this really convinced me to go mostly to cash. And then the markets collapsed, I think about 1 week or 2 weeks after this, as we realized that what he was told about was coming to fruition. So he was told about every country in the world locking down, that sort of thing. And yeah, he was so accurate. And the reason is because he dug deeply. He dug deeply into the topic. He found out that this was looking pretty bad. And I have heard quite a few experts say, we had no idea this was going to happen. We just didn't know. I'm pretty sure Scott Phillips said that. Well, who knows? I thought this was going to be not that bad. And no one could know. No one could know. Well, no, if you dug deeply, if you understood what was happening in China, you could see this play out the way it did. And it did. So it does emphasize that sometimes digging deeply into a subject does have its benefits. And that is exactly what Frasers did with Opthea's phase 2 results. They dug a little bit deeper and did not like what they saw. So thank you for that PTB fund, because, you talk about here, cautionary tale about not just story stocks. So the problem with story stocks, particularly with Opthea, it's very binary. It's absolutely binary. Either you're going to win or you're not. If you win, share price will take off. If you don't win, share price will drop 90, 100%. In fact, Opthea may never be trading again. So that's the problem with story stocks, but also very important that it's digging a little bit deeper, reading between the lines. And sometimes I'm not smart enough to do that. Sometimes I rely on the market. Okay, Agent 8627. Oh, this is about the margin loan. Hi, Kneppy, you said you'll get interested in the XJO when it reaches around 7,100. What number would it take before you trigger that margin loan? Perhaps a sell in May and go away might actually be relevant this year. Cheers from a long-time subscriber. Oh, yes, that's my Americanism coming out. Pronouncing the R's. Subscriber. Anyway, margin loan. So I did mention 7,100. And the reason I said that is if you have a look at the XJO, particularly the weekly chart, the bottom of the range is currently around about Yeah, in fact, the current bottom range is around about 6,875. So that would be when I really get extremely interested. So 7,100, I might start thinking about buying at that point in time. But if the worst case scenario, and we have to think about the worst case scenarios, best case scenario. So the best case scenario is on Monday, because the markets have tanked, Trump completely flips when it comes to tariffs. That's a possibility. I would not rule that out at all. And now the worst case scenario is he hold firms with tariffs and all countries retaliate and we go into a trade war. And the worst case scenario is Great Depression, another Great Depression. That is a possibility. I think it's a very low possibility, but that is a possibility. So in the worst case scenario, I would imagine the XGO falling 60%. I'm not sure any more than 60%, but 60%. During the GFC, it fell between 50 and 60%. In fact, I can tell you exactly what it fell during the GFC. Where is it? There it is. Now, before the GFC, we saw a massive bull market, so that didn't help either. I suppose we've seen a massive bull market here, but if we have a look at how much it fell during the GFC, I would imagine somewhere between 50 and 60 and around about 54.5. There you go. So that's the worst case scenario. Or maybe not. It's maybe a little bit worse than that. I suppose the worst case scenario is there's a meteor heading towards Earth and all indices move to zero because no one needs cash anymore because we're all going to die. That is the worst case scenario. But in this, the chance of that of happening are so slim that it's almost worthless to even think about. But the worst case scenario here is a really damaging trading war, and that's a possibility. And that is what the market is concerned right now because of the uncertainty. We just don't know what's going to happen. So in that worst case scenario, let's have a look at how much or what level you would go all in. And that's probably the level I would go all in. So we're looking at I'm going to say 50% drop. Let's have a look at a 50% drop. In fact, I don't have to do this. It's 8,600 was the high, so 4,300. So funnily enough, 4,300 is near the bottom, not quite the bottom of COVID-19. The bottom there was 4,400. And I did learn a fairly good lesson during COVID-19 because I went very highly cash before COVID-19. And then because we saw a pretty stark, deep slump in the markets, I had to start thinking about when would I start buying. And I put actually a target. I put a target at 4,000, was it 4,200? That was my target to start really going hard into the market. It got down to 4,400. My mistake is having a target and then just focusing on that target. What I should have done is start buying when it went below the trading range, and then more it fell, more buying I would do. And that way it's almost impossible to time the exact bottom, but you don't have to time the bottom. So that is something I should have done. So if I do see the XGO fall below 7,000, that's when I'll start becoming interested because that's moving towards the bottom of the trading range. But again, if we do go into, say, a recession, a depression, the market will fall significantly more than that. And the worst case scenario is round about mid 4,000s. So that's when I would probably go all in when it comes to margin loans because I don't imagine it falling much more than that. So when it comes to margin loan, I want a really big margin of safety, and that's when I'll go all in. Before that, I will start deploying my cash, most likely. Not all of it, but a lot of it. And then take advantage of the margin loan. And then I'll actually take advantage of other loans as well. I can do that, so why not? So hopefully I've answered your question. Yes, I'm not a big proponent of sayings like sell in May, go away, or like Santa rally. I don't believe in Santa rallies. I don't listen to those sort of sayings at all. Thank you, Agent 8627. Now let's look at, or actually the next two comments are in regards to MinRes. And I was going to keep one comment per or question per viewer, but unfortunately Scott29RB mentioned MinRes, and there was another question about MinRes higher up. So Scott says, I reckon MinRes is looking like potential. Hard to believe it was flirting with $100 not long ago. And Anthony K96 said, if I can find it, are you a fan of MinRes at current valuation? So I thought I would include both in this particular video. So my big problem with MinRes is I once considered this company to be high quality. I can't consider this company high quality. I don't know why I ever considered MinRes to be high quality. I think it was because of the management. I really like the management, but I've now been turned off the management. And obviously, when you have a look at the weekly chart, this is not the chart of a high quality company. This is a chart of a cyclical company, and definitely MinRes is finding or feeling the effects of cyclicality when it comes to commodities, lithium, particularly lithium, but also iron ore. And the share price has plunged from $96 down to $20. And the share price just keeps on falling. If we go to the daily chart, remember back September last year, there was a lot of people going, even I was excited, going, oh, if it falls to $30, I'll buy some shares in this company. And there was a really good bounce. It bounced off $30 perfectly, went from 30 to 55, and then fell much lower. So it's gone from 30 to $20, and actually $18.95. It could fall much further from here. I don't know. So in this case, because I don't consider MinRes to be high quality, I more than likely would just trade it based off the chart. And at this point in time, I'm seeing no buy signal because share price keeps on falling. And the reason I do this for low quality companies is because who knows? The share price just keep on falling. There's a potential the share price could never recover. Potentially, share price could never recover. And I'm more confident that a high quality company will recover in the end. So I won't consider MinRes a high quality company just now because of what they do, mining services. And the funny thing is, I don't know why I considered MinRes to be a high quality company, because mining services in its very nature is cyclical. And we know this if we just go back to 2016. What's a good company? Monadelphous, maybe? Monadelphous? Yeah, let's have a look at Monadelphous. This used to be considered the highest quality mining services company in Australia. And if we have a look at the weekly chart and go back to 2016, share price, actually 2015 was the main drop. Share price in, what's happening there? Share price of MinRes, or not, Monadelphous dropped dropped a lot. It dropped 81% from 2013 into 2015 because of a downturn in the mining sector, particularly when it comes to iron ore. So these type of companies, mining services, are cyclical. In fact, Perenti share price was 20 cents. Used to be called Ausdrill then. I'm trying to think of another company. Many mining service companies had lots of trouble during this period. In fact, many mining companies went broke during this period. BHP share price dropped to $15. Am I right? $16 maybe? Because this was the bottom in the iron ore cycle. Let's have a look. BHP dropped to, $13. There you go. Yep. So that was a great time to buy BHP, by the way. I'd say out of all the mining companies in the world, BHP has a claim to be the highest quality. But even though has a claim to be highest quality, that is not what would happen to a really high quality company. The share price of a company, a high quality company, should not fall because the thing they're selling has gone down in price. They should have control of how much they're selling the product for. In this case, BHP has no control of how much they sell iron ore for. That's why the share price dropped to $13. But would have been a great time to buy, because that's the time to buy mining companies at the bottom of the cycle. And mining services fits into that as well. So the way I would trade MinRes is I would just look at some positive share price action, and we're not seeing it just yet. Yeah, not seeing it just yet. So thank you for that, both. Why does the YouTube Studio do this? Oh, no, actually, sorry, I didn't do anything. So thank you for that, Scott and Anthony. Now on to... Oh, okay, not Rick Thellian. You get a 50% discount on capital gain tax if you hold for 12 months or longer. I actually did reply to this. Yes, that is true. That is true, Rick Thellian. That's why Ansell, I was going to wait, but I had to sell because share price could drop a lot, but I sold Ansell. Okay, pre-ETI Kurong. Is that Indonesian? I don't know anything about Indonesian, but for some reason, Indonesia, Malaysia, that's crying out to me, that name. Hi, Kneppy. Oh, this is a very easy answer or question to answer. Hi, Kneppy. I bought Pilbara last year, April, $4.01. It's down 58%. It's always down when I check it on my brokerage account. Could you please advise me if there's any future growth in this stock, or should I sell it? Sell it. Thank you. Very easy to answer this one because I cannot advise you what you should do. It's up to you. Up to you what you should do. I can't advise you at all. It's against the law. Against the law. I can't tell you what to do. So this is what I would say to anyone who's in this predicament. Why did you buy the company in the first place? So why did you buy Pilbara in the first place? You must have had a reason. So was a reason because you're very bullish about lithium in the future? Was a reason because you like the chart? Was a reason because you like some girl who worked at Pilbara and you think you're falling in love? Why did you buy some shares in Pilbara? And has that changed? Okay, so if you were trading it, then you probably should have been out a long time ago. You probably I'd say, why would you trade it in the first place? If you think there's long-term future in lithium, then has that changed? And if that girl is now your wife, well, you don't have to hold Pilbara anymore. You've got the woman or the wife, or whatever you want to, maybe it's a man, who knows? So has the reason, the thesis why you bought into changed? So again, I can't advise you. So the most important thing is to make decisions yourself and also have a plan. Have a plan. Not only have a plan why you bought and why you would sell. Always have that plan. So that is something I do all the time. Have a plan. Okay, so hopefully that's enough, but I cannot advise you what to do. It's up to you. I could be wrong. I'm going to have a look at the chart for Pilbara, and I could be wrong no matter what I say. And if I'm wrong, I could be wrong. Oh, geez. Oh, he looks ugly. Down to 1365. And I'll be honest with you, I think eventually we're going to see some support in lithium. Eventually we're going to see lithium prices rise. I just don't know when that's going to be. And the more Pilbara falls, the more interested I become. But the problem is I don't know how much it has to fall. And this chart looks ugly. It's probably oversold. I probably would expect a bounce, but the bounce might not happen. And it did fall through a nice little support level at $2. Now it's $1.36. So if you have a look at the weekly chart, the last time share price of Pilbara was this low was back in 2021 when lithium prices were rising. This looks like the lithium chart, almost. But anyway, Pilbara, I'm pretty sure Pilbara is still profitable at these lithium price levels. I could be wrong. So again, why did you buy lithium, and has that changed? The reasons behind that decision, has that changed? Okay, so let's move on to the next one. Country Lad. Country Lad is asking about the 25-100 EMA Cross, and he can't find it, or she can't find it. Well, it's he, because Country Lad, I'm pretty sure, unless they unfortunately left out the Y, it could be Country Lady. Oh, yeah, there's a possibility. 001. Yeah, it could be a country lady, or country lad. Who knows? It's not that important. Anyway, so how do you bring in the EMA Cross 2500, which I use all the time? See EMA Cross 2500. Okay, so this is the most important thing. There is no EMA Cross 2500 in TradingView. You have to do it yourself. Well, not exactly. So what you do is there is an EMA Cross, unless someone's brought it in, EMA Cross. No, 5200, 5200, 5200. So what I would do, or what I did do, is I brought in the EMA Cross 5200 from Sholmes. In fact, I can do it now. And if you want to change it to 2500, or maybe 10 to 15, or maybe 200, no, maybe 75, 150, or maybe 6 to 97, you can do whatever you want. What you do is you go into the Pine editor. So you can go to source code and go into the Pine editor, and you should be able to, or you can't, it's read only, but you have to create a working copy first, and then you edit it. Very easy edit. If I can do it, you can, because I'm not that smart. I'm pretty stupid. So all you have to do is change the third line to EMA close 25, change the fourth line to long EMA close 100, and then you can change the thickness of the lines easily as well. Ooh, my keyboard is running out of power. So that's all you do. So change it to 2500. And in fact, here is my script for the 2500. And that's all I did. And I put it in line width to make it a little bit thicker. So hopefully I've explained it well. So you have to know a little bit about editing the script. And to be honest with you, again, it's not that hard. Honestly, if I can do it, everyone should be able to do it. Except maybe an animal who doesn't have a brain. Okay, so that's for you, a country lad or lady. Next question I've got is from Devshaw. Oh, in fact, there are two questions about Mesoblast. There's one from Devshaw, 4030, and there's also one from, I believe, Ben Hutchinson. So, in fact, I agree with Ben Hutchinson here. So I'll talk about why. And I have to actually say what he said first. So Devshaw says, looking at the depth, I feel like Mesoblast could go down further, around 150, before it can bounce back or stay there for a long time. Just a guess based on how it kept on going down last month. A lot of negative sentiment in Mesoblast right now, keeps on dropping, and I suppose negative sentiment in the market. Though considering they have at least 4 to 5 products, not like Opthea with just one product, and having FDA phase 3 trial approval for one, I think it may eventually go up like T-Lix. Okay, so that is important. So I am bullish about Mesoblast because they do have a lot in the pipeline, and finally they got FDA approval. But there is one question. There's one big question about how much they're going to get from selling this product into Remensil, whatever it's called, whatever it's called. And Ben mentions this. Ryan said, that's it. Very skeptical on Mesoblast on fundamental grounds. May be able to trade it briefly, but I expect it will crash to earth and eat your hard-earned dollars over 1 3-year time frame, which is a possibility. Yeah. The problem is a massive market cap, around 2.8 billion. Now that Reinvesting is approved, the question shifts to what can it earn? And the sort of revenue to support current valuations requires heroic assumptions. Reinvesting is for this disease, SRAGVHD, whatever it is, in pediatric patients 2 months of age and older. That seems quite a specialized use case to me. How many such customers and what can they pay? Fortunately, Mesoblast did release an announcement in regards to how much they're going to charge and the amount of patients. So you do have to make some assumptions, but we have seen this in the past when even if there's not a lot of customers, companies can make a lot of money because they do charge a fair bit for their product. And Devshaw actually did reply to that. And I won't talk about that. So let's just have a quick look at this announcement from Mesoblast. This was released maybe 2 months ago. And they've been releasing some good announcements. Not subject to the US tariffs, first child to begin treatment. So right now we know there's one child being treated, one child. So if we go back 3 months ago, where was it? Here it is, Reinvesting pricing set on the 27th of February and available this quarter. Now, not only do we get a pricing, we also have some information about how many cases per year there are. And there's actually quite a few cases. I think it was 375. So each year, approximately 375 pediatric patients in the US are diagnosed with this particular condition. So it doesn't seem a lot, but they are charging, it was a lot, 180,000? No, 194,000. So the wholesale acquisition costs of Reinvesting is 194,000 per intravenous infusion, irrespective of body weights, to assist patients in institutions with insurance coverage, financial assistance, and access programs, ensuring that no patient is left behind in receiving this potentially life-saving therapy. Mesoblast has established My Mesoblast, a comprehensive patient services hub where Reinvesting will be available for ordering. So the question becomes, how much cash are they going to get from this? And this is possibly a mistake I made. So a lot of times what I would do in the past is just wait, sort of like what I did with T-Lix. I just waited to see the cash flow, and that blew me away. I don't think we're going to see that sort of cash flow with Mesoblast. And it wasn't the cash flow, it was the significant increase in cash flow. So the next, wouldn't say this quarter, but definitely the next quarter is going to be really interesting when it comes to Mesoblast and how much cash flow they're getting out from this treatment. But also they have other things in the pipeline that could be really positive for this company. But I do agree with Ben Hutchinson that there is a lot of questions when it comes to Mesoblast. So what I did is I took a small position in Mesoblast, just like I took a very small position in Opthea. It was just like a token position. That is all it was, just a token position. And the reason I did that is I have found that when I have a token position or a very small position in a company, I do tend to follow that company way more closely than other companies that I am watching. And that's the whole reason. So if they are successful, that's great. I can add to my position when I do see Ryan still being successful in the United States. And if they're not, I don't really care, because the whole point is taking very small positions in these possible high growth situations, and a few of them will be successful. It's like Opthea or Mesoblast. But I didn't do that with Telix. I just waited for proof. I did the same thing with Neuron Pharmaceuticals. I just bought on that potential, and the share price went bananas. But the valuation of Neuron was much lower. So I actually do agree with Ben Hutchinson with this one. I think there is definitely a case just to wait to see how much they are getting. But we do have a bit of a clue. We do have a little bit of a clue. Okay, now I'm going to go back a little bit to Trader Hooper. In regards to the April Fool's prank or joke I played on you, I'm hoping you did not fall for it. Trader Hooper says, very clever. The best stories are based on truth. Now I'm wondering how much of the story is true and which parts are fictional. Ha ha ha. Okay, so no basis in truth at all. Zero, absolute zero. I can be quite imaginative. Very imaginative. So what happened on it was the day before April 1st, so March 31, or how many days are on in March. And what I do in my notebook, so this is my notebook, it goes back a fair way. So this particular notebook goes back to June last year. And all I do is write down ticker codes and stuff that happened in the day. Maybe something I want to talk about, something I want to do a little bit more research on. And when it comes to the end of the trading day, after I finish recording, I go through all the announcements. And I just have a look to see if any company released an interesting announcement after I finish recording. And I always put down the date. So I put down April 1st, and I went, oh, it's April Fool's Day tomorrow. I should do a video. And then within 30 minutes, I had already recorded the video. And initially, I was going to have a very similar story than I had. So Roger disappearing, but I was going to change it and have it that I was running away from the police, that the police are going to be after me because now they suspect that I had killed Roger for the Bitcoin, because it does look suspicious, doesn't it? Even though they haven't found a body or haven't found a weapon, and then I had to run away with the Bitcoin and I would never be seen again. I was going to go down that road, and then I thought I probably shouldn't. A little bit more too morbid. So hopefully no one fell for it. I do know a few people did, based off comments. So, but nothing's true. There's no Roger. I have known one Roger. Well, technically I've known two Rogers in my life. Well, Roger Federer, we're buddies, so maybe that's three Rogers. The only Roger I've really slightly known was a guy I briefly worked with in Japan, and this girl from Taiwan took us into Tokyo to have a look around. And just one day, we had a good time, all three of us, and that's the last time I spoke to Roger. Who knows? I haven't even thought about him until now. I don't know why I came up with the name Roger. Who knows? Who knows how my mind thinks? Even I'm not sure. So no, there's no truth at all. Their stories are based on truth. No truth to that at all. On occasion, I have wondered, if I have a time machine, what would I do? Go back and buy some Bitcoin. Maybe that's true. We talked about Mesoblast. Just James Dean. Now, there are a few comments and questions from Just James Dean. And the reason why a couple of comments have no substance, not the comments, but they're not talking about investing or something important like that. And the reason I brought this one up, silly man, you could have bought 2 Star Casinos with their money. And then Anmar133 replied, the only thing better than one ex-multi-billionaire company is two ex-multi-billion-dollar companies. And the reason I found this interesting is because I thought about this. As I was coming up with the story, I was thinking, with this money, I could just buy out Star Casino and still have a lot of money left over. And the other interesting thing I was thinking about is, instead of going through the story I went through and then going through the police that are after me, I was thinking of maybe, I did it the next day. I'm back one. Yeah. And I think that's why I did that scenario, because I was thinking about, I could actually buy Star Casino. I could bail them out. I could easily do that. So this was my line of thought. Yeah, I think the I'm Back video, if I remember correctly, I lost all my money putting it on black or red at the casino. I can't remember what I said in that I'm Back one. Simon PT says, Kneppy should consider joining the Hollywood. Okay, I'm going to go on a rant now. So it's time for a rant when it comes to Hollywood. A rant. I'm not sure if I've told this story before. I lived in the United States for about 8 years. The last 3 or 4 of those, well, not exactly. I did work in Alaska for a period, but a lot of times when I was in Oklahoma, maybe not New York, but definitely Oklahoma, I would go to the movie theater every single Friday and watch 1 or 2 movies. And I just loved movies. I wanted to watch most movies. I didn't care if it might be bad or something. I just loved watching movies. And that love of movies has dwindled and dwindled over the last 10 to 15 years, to the point where I no longer go to the movie theater, and have very little interest in watching movies because we're just seeing recycling. All we're getting is sequels or even prequels, which I don't like. Sequels, prequels, Marvel movies, superhero movies. And if you have a look at the movies coming out in the next year, you can do this, 2025, Films USA Wiki. I did this recently. And just go to like June or July, which is when the big blockbusters come out. And you just have a look at some of the movies coming out. It's ridiculous. Another John Wick movie. Oh, just above that, we have a Karate Kid movie coming out. Life of Chuck. Is that a Chucky movie? No. Okay. What else? How to Train Your Dragon. Another one. Really? 28 years later. Well, actually, I'm sort of interested in that one. Megan 2.0. Megan, the first one, was not enough. Another Jurassic World movie. Come on. The Old Guard 2. What? Another Superman movie. Another Smurfs movie. Another I Know What You Did Last Summer movie. Another Fantastic Four movie. Really? The previous one didn't suck enough that you have to make another one? Happy Gilmore 2. That actually could be good. The Bad Guys 2. Look at all the sequels. There's just no originality coming out of Hollywood anymore. Now, Naked Gun. The Naked Gun movie with Liam Neeson. What the hell? Actually, that could be interesting. Look at the that could be interesting. Leslie Nielsen, Liam Nielsen, same. Yeah, Leslie Nielsen. I don't know if anyone knows this. Before Flying High was released, he was considered a dramatic actor, and then he went to comedy. And Liam Neeson would be considered like an action star or movie actor. And this could be good. I don't know. Freaky Friday. I'm pretty sure that's a sequel to Freaky Friday with Jamie Lee Curtis and Lindsay Lohan. Yep. Nobody 2. Actually, I'm interested in that one because the first Nobody was awesome. Toxic Avenger. What's that? Another superhero movie. Another Conjuring movie. Another Downton Abbey movie. The Long Walk. That's a Stephen King. Yes, it is. Oh, that could be interesting. That could be Spinal Tap 2. Actually, I'll be interested in that one. You can see Strangers Chapter 2. It's just no originality. No originality. There's very few really original good movies coming out of Hollywood anymore. And I don't exactly blame Hollywood. I blame people because they see this sequel, they see another Avengers movie, and that's the movie they go to instead of taking a chance on this, what could be a great movie. And I just remember 1995, we had Shawshank Redemption. Shawshank Redemption, Pulp Fiction, Forrest Gump all come out in the same year, and Forrest Gump won the Academy Awards over those two movies, which I think is a mistake, because Pulp Fiction and Shawshank Redemption, I think will have a much greater impact on the movie industry than Forrest Gump. I could be mistaken, but Pulp Fiction. It's a unique film, and Shawshank Redemption is one of the most beloved movies ever made. And if we go back to, say, 2008, in the same year we had, I think it was the same year, we had the Batman, the Dark Knight. We also had There Will Be Blood, and we also had Nobody Cares for Old Men. No Country for Old Men. And those are three absolutely extraordinary films. I think they're all in the same year. But we had No Country for Old Blood, Dark Knight, and There Will Be Blood. No Country for Old Men. Yeah, There Will Be Blood, and the Daniel Day-Lewis performance in There Will Be Blood. Not my favorite movie, but his performance in There Will Be Blood is one of the best performances you'll ever see. And we're just not getting that anymore. And I've just turned away from movies. I'm way more likely to watch TV shows nowadays. And I think there's a reason behind that. And the main reason behind that is because of the streaming wars we have between all these different streaming platforms, its quality is very important. You have to attract people to come watch the really good TV shows. So I would say we are in the golden age of TV right now, and I'm way more attracted to TV than I am a film. And sometimes I won't watch a film for a long time, but I always watch TV shows because the quality in TV shows these days is absolutely stunningly good. Not all of them, but a lot of them are. So that's what I'm going to say about that. Joining the Hollywood. They wouldn't accept me because I have originality. They don't want that anymore. They just want recycled shit. I don't think I can say shit. Recycled crap, that's what they want. Okay, so Rant ended. Now we're going to go to Andre Bradovic. So is that Serbian? Croatian? That sort of area. Anyway. I remember, I saw this one and went, we're two peas in a pod here. So Andre hates the Chemist Warehouse for killing normal pharmacies, but I will buy the stock. I am like that as well. I don't have any ESG filters, none at all. I will buy coal companies. I will buy oil companies. I will buy gambling companies. I will even buy a company that actually, no, I won't go that far. I will not buy a company that will kill any sort of animal on purpose. I will not I would not buy companies who intentionally kill human beings, that sort of thing. I do have a limit, but I think that would never happen. Either of those two would never happen. The reason I say about animals is the way we view animals, humans view animals, is changing, and it will continue to change, and eventually humans will not eat animals. And I'm talking about well past we're dead. I'm saying 200 years from now. And I have no doubt, zero doubt, that our descendants will look back at what we used to do, eat animals, and will think that's so barbaric. Sort of like we do now, and how we might look back at our ancestors and look at what they might have done. And God, how could they have done that? So I think that's going to happen, no doubt, because our thoughts and the way we view animals is changing. I think that's pretty good. So, and Chemist Warehouse, I have no problems buying Chemist Warehouse, no problems buying, you name it. I have no ESG filters when it comes to that. In my opinion, investment is different than what a company is doing. And if a company is doing something really good, it doesn't really matter. Like gambling, I don't really care. I hate gambling. I think gambling is horrible, particularly poker machines. I have gone into casinos before, and the only thing I would ever play at a casino is blackjack or maybe poker. But poker's different. It's not really against the house, it's against each other. Anyway, so two peas in the pod, me and Andre. No ESG filters. VBE D666 this is another one where I did have to choose between two of his comments. And this one is in regards to, this was an interesting day. And he cannot work it out that the All Odds was up 9 points was that Wednesday? but it felt like it was down over 100 points. 80% of all my high dividend paying blue chip stocks got hammered. And K23 Man says, yeah, my portfolio was down heaps as well, assuming it was flight to safety in blue chips. And my portfolio was down a lot that day. Funny enough, it was up a lot the next day when the overall market was down because of one company, Stealth Group. So I just assumed that a lot of the companies in my portfolio were just had a bad day. But there is a possibility that, and I wish I could go back, have a look at how the ASX 20 performed on this day. And maybe, just maybe, although he did say 80% of all my high dividend paying blue chip stocks got hammered, maybe it was one sector. Maybe it was iron ore. Do you have any iron ore companies in your portfolio? So it could have been iron ore. In fact, let's have a look at Wednesday, and we'll have a look at, say, Rio Tinto. No. Maybe banks? Do you have banks? CBA, maybe CBA? I'm thinking of the biggest companies on the ASX. CBA was up 1%. So it could have been the banks. So if you don't have much money in the banks, maybe that's what happened. And maybe it was just the breadth of that day. The good performance was very narrow. I'm thinking that's what's happened. The breadth of the good performance was very low. So even though the odds was up 9 points, it was being led by some of these big banks, and that was all that happened. So I'm not sure exactly what, but yeah, something happened along those lines. Assuming it was a flight to safety in blue chips, well, hopefully people weren't fleeing to the banks because they think they're safe, because if we do go into a deep recession, the banks' share prices are going to drop 50, 60, 70%. That's an almost given. They are not safe in recessions. They are highly cyclical. And I have heard some experts say this, that a lot of investors in Australia now haven't experienced that just yet, but they are highly cyclical. In fact, let's have a look at what CBA did during COVID-19, the GFC. It would not be surprised if Commonwealth Bank dropped 60%. Let's have a look. In fact, I've got it here for some reason. I don't know why. I probably have looked at this in the past. Down 61%. There you go. 61.5% during the GFC. Again, banks are not cyclical. No, banks are cyclical. What was I saying then? Jeez. So thank you for that. It was a good, interesting day. I still remember that, going, Stu Pershey says or asks, did you see Playside Studios announcement? Yes, I did. In fact, I briefly mentioned this in another video, but I thought I'd talk a little bit more about Playside Studios. Okay, so Playside Studios, they have work for hire. So they get work from other companies who want to produce some sort of game. They also have original IP. And they are having trouble when it comes to work for hire, less work, and that is affecting their performance. So no impact to progress on major original IP projects currently in development. Remains confident of winning new contract work. Previously announced delays in winning work for hire contracts. So they are firing some people, saving $4 to $5 million per annum, and an upfront cost of approximately $1.5 million. We're going to see more and more of these announcements, particularly in the United States, over the next few weeks, if we don't see any change to the trading war that is happening before our eyes. If this continues, if the trading war gets worse, we just don't know. We're going to see a lot of responses like this. We're already starting to see it. I'm trying to think of the two companies that decided to sack a lot of their staff. I can't remember. Firing staff. Is that enough? Firing staff, USA announcements. Well, no, we're going to freaking RFK. Ugh. Oh, no, we're talking about widespread firings at federal health. Ridiculous. Yeah, okay, so that's not what I want. Well, that's going to actually not help either. With just people just getting fired like willy-nilly without even thinking about what they do. And I just find it extraordinary that they've been firing people and then they have to rehire them because, well, they have nuclear codes and that sort of thing. Ridiculous. What they're doing is just, there's no plan. They just went, we've got to fire these people. We've got to save all this money. And we know this because I think it was health. They wanted to save $880 billion and there was no plan. We've got to save this amount of money, so we're going to get rid of all these people. There's no plan, and that's my biggest problem, is just no plan. Anyway, so we're starting to see companies in America fire people because of tariffs. Yes, because of tariffs. And they think, oh, this is going to bring all these jobs back to America. No, there's more likely there's going to be less people employed in America because of tariffs. Anyway, Playside Studios. I'll have a look at the chart. The other thing I should mention about Playside Studios is hopefully they're now going to focus on the original IP. That is where they have complete control, because they have no control when it comes to work in hire. But the problem with original IP is you just don't know which game is going to go crazy, which game is going to be really popular. But that can be the success or failure of this company, and the chart is looking awful right now. Down to 16 cents. Wow. It was above $1 in May last year. Just James Dean, another one of those empty or vapid comments. But even though it's vapid or empty when it comes to investing, we have an unfortunate circumstance when Val Kilmer has passed away. Iceman forever. 65 years old. Jeez. I still remember going to Top Gun, 1986. I was a young boy. I love that movie. I think every young boy loved that movie. Val Kilmer. And I always remember Val Kilmer as Iceman, looking so sprite, young. And I don't remember Tom Cruise as that because he's been in heaps of stuff since then. Val Kilmer has as well. He was in The Doors and some other stuff. Even Kelly McGillis, who was The Shrink, if I remember correctly. She was in The Witness the year before. She was almost quite hot. She's 67 now. And I was thinking about this, Val Kilmer, when he passed away, and not a massive shock because he did have cancer a few years ago. So that's always a possibility. But how just time just seems to slip away so quickly. And these people you remember as being really young are now getting older and older. But that is life. That is time. Time is an interesting thing because time is not constant. Time is not constant. When did time begin? Time is not constant. Al McAvoy, Kneppy, hate to say it, Telstra, daily chart breakout with volume and consolidation earnings, your fave. It is my favourite, isn't it? Exactly what I looked for. And I'll be honest with you, Telstra looks really interesting. Telstra looks really interesting. And because it looks really interesting, I did a little bit of research on their results and I found something I didn't like. I probably should not have done that. This should have just been a chart, looking at a chart, seeing something I really like and going, oh, I don't care about the company. I'm going to leave my bias out of it. Just trade the chart. Telstra is defensive. So it won't be as affected, nowhere near as affected as other companies if we do go into recession, that sort of thing. People are going to still need to use their phones or their internet. People won't be pulling back on that, will they? They're spending on that. No way, Jose. In fact, they're more likely to spend more time at home watching movies on Netflix and that sort of thing instead of going out to the restaurants and to the movie theatre. So, in fact, Telstra could even benefit from a recession if that sort of thing happened. So, really good chart for Telstra. The share price broke out on their results on the 20th of February. It's got everything I want. And so I saw the share price go sideways. I went, oh, I should buy a position in Telstra. And yeah, I did not. Thank you for bringing that up, Al McAvoy. But anyway. Forest Hill, 8462. You know who Forest Hill is? Most of you will hate this. He is my favorite viewer of the day, maybe of the week, because you know what Forest Hill did? He gave a donation. In fact, here it is, Forest Hill 8462. First Ko-Fi bought. Hope it was the hot chockey you wanted. So I do have donations available if you want to give me a few dollars, $5. I think the lowest is $5. I might change donations, the lowest donation to $2. What do you think? $2? You also can have monthly memberships. Anyway, so I do have donations now if you want. I'm thinking maybe just as a possibility, I could just invest all my donations and we can follow how these investments go. I've been thinking about doing that. So Forest Hill 8462 always has a special place in my heart. as the first person who donated some money. Anyway, so Forest Hill 8462 says, thanks, Kneppy. Haven't watched this one yet, but I'm sure it'll be a banger. It was a great one. I don't know. I'm a little bit biased. Orange Moron has just announced his latest tariffs. Can you please do a video covering your thoughts and what stock sectors in the ASX will gain lose? Thank you. So I won't do a standalone video because this is going to be quick and there's one obvious answer. In fact, the obvious answer is all you have to do is go back to what happened on Friday. Hopefully they still have it here. The best sectors, staples, defensive, food. No one's going to pull back on, well, maybe going to restaurants, but more than likely people will spend more money at Woolworths and Coles if we go into a recession. I think that's an absolute truth. So Woolworths, Coles, defensive, Telstra, as I mentioned in the previous section, Telstra, defensive. People won't pull back on their spending when it comes to internet or phones. Maybe buying Apple phones, they will, or Samsung. Maybe Apple phones because it's American and people will start going to alternatives, which will be great, I'll be honest with you, even though I'm half American. What else is staples? Infrastructure, Transurban, APA Group. In fact, APA Group is a company I am trading. Let's have a look to see how that performed. Up 1.77%. Transurban, up 1.18%. So infrastructure, I don't think infrastructure is or has its own sector. So staples, infrastructure, banks definitely not. Get that out of your head. Even gold, maybe not gold. Had a bit of a pullback, but gold could be up there. What else? I'm probably missing some stuff, but definitely staples, discretionary, consumer staples. Discretionary is the opposite of staples. It's things you buy when times are good. I mean, maybe not absolutely true, but staples, infrastructure, yeah, and there's probably more. Hopefully I've helped you. Anthony, I've already answered that. And Just James Dean, another one. Actually, Just James Dean has two in a row here. If Lavisa makes really good return on equity, it should reinvest the earnings for even more store sales than paying out more cash as dividends. Absolutely 100% true. And I have an example. I might do a standalone video on this. See what you think for further explanation. So there's this scenario where I have $2 million, and I have two friends who want $1 million each to start a business. And I say, well, I'll give you $1 million each. So they get $1 million. That's equity. So that's $1 million of equity, and they can do whatever they want. They could sell amphetamines or sell widgets or sell flying lessons to the crypto billionaires. They could do whatever they want. All I care about is the return I'm going to get. So every year I say, come back with the profits you have made and we'll see what we do with those profits. So the first friend comes back with that $1 million. Who knows what he did? And he comes back and says, I made $10,000 profit. And I would say to him, I'm going to take that $10,000 in a dividend and just do whatever you did. Or maybe I'll take that $1 million and give it to someone else who can get better returns on $1 million. So return on equity is at $10,000 divided by 1 million. So that's 1%. And when a company has a really low return on equity, you're not getting much return from your original investment. That's the way I look at it. And so the whole point, and the reason that's important, is because if you have that really low in equity, they can't do much with that equity. They can't make much money. So I might as well just take all that money as dividends because there's not much compounding happening there at all. No compounding, very little compounding. Okay, so my second friend with $1 million comes back to me and says, I did pretty good, and I think there's a possibility we can do even better over the next few years. So I made $200,000. So again, return equity, $200,000 divided by $1 million, return equity 20%. And I say, take all that money and reinvest it into your company because that's phenomenal returns. Wow, what good returns. So he goes away with $1.2 million and he comes back the next year and says, hey, 20% return again. So he's turned that 1.2 million now into 1.44 million. Is that right? 200, 1 point, you know what I mean. 1 point, oh, wait there, let's have a look. 10%, no, 20% of 1.2, 10% is 120, 240, yeah, 1.44. That's absolutely right. So we've gone from 1 million, 1.2 million, 1.44 million, and then if you keep going, you can see the effects of compounding. If this particular friend keeps on reinvesting those returns back into the company. So this is a situation where you don't want to take that return and just frivolous spend it on whatever. You want to invest or put that money back into the company. So hopefully that makes sense, my example. Maybe I should do a stand-on video with some pictures and that sort of thing. So Just James is absolutely right. A company with a really good return on equity should always reinvest that money into the company and no dividends. Absolutely right. Just James Dean also said trend killer for Tuas, as some people pronounce it, Tuas. Yes, I was trading this and I've gotten out because of this. Released results. I thought the results were good. The market disagreed. Share price dropped a fair bit and kept on dropping. That's a trend killer. In fact, I believe Tuas might be in my trend killer watch list. Let's have a look. Yes, it's there. So yeah, this is an example of a trend killer, and this is something I'm going to follow to see how much further share price goes down. Now, not all trend killers, I think, will play out like that. There's going to be some false signals, and that's very important for me to find those false signals, either in this sort of situation or the complete opposite, when share price of a company is in a downtrend, and then we have a trend killer event, and the share price pops up. Perfect example of this, again, is APA Group. This is a trend killer, but going the opposite way. Share price in a downtrend, release results or something, and share price has popped up, and share price keeps on going up. So this is of fascination to me right now. So thank you for that, Just James Dean. For a silver, we talked about your first Kofi bot. Stu Percy. Okay, Stu Percy, I'm 50% cash now. What's on your shopping list? In fact, there's a few comments in regards to this, I believe. So yeah, we'll have a look at Stu Percy, 50% cash. What's on your shopping list? Kneppy. Karat Singh says, another horrific day. Keen to know the top 10 stocks you plan to buy. Top up once the storm is over. Bloodbirth this morning as well. Are you starting to buy? I'm getting tempted. And then we get towards the end. Okay, so let's talk about what's on my shopping list. It's fairly easy. High quality companies at this point in time. And I'll show you exactly what I'm doing and what I'll be doing during the rest of the weekend. So let's have a look at let's have a look at the USA, because I believe the highest quality companies are in the USA. Now, I should also mention I do have, and I'm building, a couple of quality watch lists. So I have the USA quality watch list. Where is it? Yes, I have an ASX high quality watch list with 36 companies, and my US high quality has 17 companies. So this is a building watch list. So in fact, what I could do is have a look at where is it? USA high quality. So let's have a look. What's in this? Oh, there's some companies I don't know much about. I've got Arista Networks. Okay, so what I do is I have a look at the weekly chart and have a look at the 200-week moving average and have a look at how much deviation there is between the share price and the 200-week moving average. If we're starting to see the share price move towards or even under the 200-week moving average, if the company is high quality, that's good buying. Good buying straight away. So we have Arista Networks, which I don't know much about, but for some reason, I've called this high quality. So that's becoming more interesting. A company called Amphenol Corporation, that's starting to look interesting now, maybe not as much as the other one. And I think the reason I've included some of these companies is because if you have a look at the long-term chart, they have high quality characteristics. So APH, look at that chart. That's a high quality company just based off the chart. I think that's what I've done for some of these companies because I don't know anything else about them. Viva Systems. I don't know about this one. ISRG, what's this one? Intuitive Surgical. Yes. And then we get Texas Instruments, I believe. Yes, Texas Instruments. Ooh, so that's one's fallen well below the 200-week moving average. So this could be a good buy. Then we get into companies I do know, Mercado Libre, not quite there. So Amazon, Amazon's getting close. That could be good buying. Alphabet, it's getting close. That could be good buying. Taiwan Semiconductor Manufacturing Company, not quite there, but getting close. Meta, not quite there. Microsoft, getting close. Apple, getting close. Okay, I can go through the whole list, but you see what I'm talking about. And then we can have a look at the ASX high quality. Now, some of these companies are very debatable whether they are high quality. So I'm being a little bit less strict with my rules. What's a good word for that? What's a good word instead of less strict? I'm being a little bit less strict. I don't know. There's definitely a word for that. Word for less strict. I'm going to kick myself when the answer comes up. Lenient. Yeah, lenient, lax. Yeah, I'll go with lax. I like that one. So I'm being a little bit less lax when it comes to my definition of high quality in this particular watch list. There's a reason behind that. So I've got James Hardie, which, in fact, if you have a look at James Hardie chart, over time, it does have characteristics of a high quality company. And right now, it's a buy based off that. Brickworks, Goodman Group, Fiducian. Let's have a look at ResMed. Definitely high quality. Not quite there. Cochlear. Oh, look at that. Look where Cochlear is. It's like bouncing off the 200-week moving average. CSL, definitely a buy right now based off where the share price is. Pro Medicus, well above the 200-week moving average. So it's still a fair bit to fall. What about Technology One? Still got a long way to fall as well. And what about Hub? A long way to fall. This is one I'm keen on because I do like Hub. And what about WiseTech? Look at where WiseTech is. Good buy. A good buy. So that is what I'm doing, is I'm just having a look at which high-quality companies are getting towards their buy price, a good buying opportunity. Just looking at the 200-week moving average and where the share price is. I also have a look at valuation, look at the P/E ratio, that sort of thing. So I don't just look at the chart. I'm looking at other things as well. So hopefully I've answered your question. What's on your shopping list, Kneppy? I think I have. And I don't have a top 10. Don't have a top 10. Yeah, but I would never have a top 10. I was just whatever looks good. And are you starting to buy? I'm getting tempted, says Motivation of Flavio. Not yet. I'm not there just yet. I do think definitely the market's oversold because of 2 really bad days in Wall Street. So I would expect a really good bounce soon. It could happen the start of next week, but definitely oversold. I expect a bounce. But is this going to be the bottom? I don't know. And that's the problem. So much uncertainty out there. This could be the start of a significant correction. Actually, not a correction, a significant bear market. We just don't know, and that is a problem. Was there another question? Sanka 5228. So De Grey released their quarterly report after the market closed on a Friday. I will mention this company in Monday's ASX Daily Rundown video. And they'll also talk about share price trend. How's that? And then Zocta, ex-Opthea, if we are now in a bear market, not quite, getting close, does that change, depending what index you look at, does that change the way you interpret charts? No. I don't change the way I interpret charts at all. I just say, wow, we're in the bear market now, or we're in a downtrend, or we're in an uptrend, or that sort of thing. Or how the market will react to individual stock announcements. This is interesting. I would assume, and you know the bad thing about it, making assumptions, you can make an ass out of you and me if you do that. I would assume that positive announcements in a bear market would be looked upon with less favorability. We saw that with Orthocell. Share price went down, even though they got announced FDA clearance to sell their product. So I would assume that would be the case. However, on Thursday, Self Group released a positive announcement, which I didn't think was that positive, but the share price popped up 18%. It went down 4.65% on Friday, but it went up 19%, on an announcement. So that was totally against the grain of the overall market. So it's interesting to see how companies' share prices will respond if we go into the bear market. And I'll be honest with you, well, no, I have been in the bear market before. So we had a bear market a few years ago. Yes, we did. In 2022, we had a bear market. Wasn't that long, wasn't that deep. And I don't remember, I don't think there was nowhere near as much concern. Yeah, there wasn't nowhere near as much concern in 2022. It was just response to rising interest rates. And it's really funny. There was a Donald Trump tweet in 2022 saying, stock market is dropping. This was all self-inflicted. So it's sort of blaming the Biden administration for the stock market falling. And I have no doubt he's blaming Biden for the stock market falling right now, even though he's the one who is driving the ship. So, so I don't know exactly how the market will react to individual stock announcements, but if I just follow my processes, my plans, and if a company releases a profit upgrade or really good financial announcements, more than likely the market will respond favorably to that announcement. So in those sort of situations, I think it should be okay. Okay, so that's all I have for this video today. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.